Dear student, as discussed in our previous session, I am going to upload couple of full length illustrations on PGBP. Hopefully you will enjoy this session, this recording. So I'm starting the number one. From the following particulars of Sri Kote, for the year ending on 31st March 2022, find out his taxable income from business for the assessment year 22-23. Fine. A full length PL is there with opening stock, closing stock, net profit, everything. Generally, this is called full length illustration. Few additional informations are there. Okay. Now we are going to trying to solve this one. How we will try to solve this one? First of all, we will start from this figure. First of all, we will start from this detail with this detail, this net profit. So in the solution, I am taking net profit as per profit and loss account 2,58,000. Okay. Now I am coming from very first item in the PL statement, opening the stock. If no information is there, it will be nothing to be done for this item. Purchase, if there is no additional information, we have nothing to do. Salaries, legal expenses, nothing to do. Bad debt, nothing to do. Rent, nothing to do. Interest on loan, nothing to do. Depreciation, we have nothing to do. If additional information like depreciation as per income tax act might be 20,000 or 10,000, then we required some adjustment, else we are nothing to do with this item. Income tax paid, it is debited into your PL statement. Since it is income tax, this is specifically disallowed under section 40A. We required to add back this one. So I'm going to this expenditure disallowed but debited in PL account. Number one, interest paid, income tax paid rupees 2,000. I provided him a note number one to give my explanation like this. Income tax is specifically disallowed under section 40A. If you don't remember section, then delete it. Then income tax is specifically disallowed. Now I'm coming to outstanding custom duty. If any information regarding the date of payment is given in the additional information, then fine, else this should be disallowed. This is covered by section 43B. If it is paid within due date of filing return of income, then fine, otherwise this should be disallowed. Right now I'm doing nothing for this. Advertisement, nothing to be done. Legal expenses, nothing to be done. Contribution towards URPF, unrecognized provident fund, if as an employer, if you are contributing towards unrecognized provident fund, that should be disallowed. If it is RPF, if it is gratuity fund, if it is superannuation fund, it is allowed subject to section 43B. But if it is URPF, unrecognized provident fund, it should be definitely disallowed. Even though you paid it, even though you paid this amount within the due date of filing return of income, this should be disallowed. So I'm adding this 5,000. Contribution towards unrecognized provident fund, 5,000. Don't worry, we will consider this one again. Now next one, general expenses, nothing to be done. Traveling expenses, if there is no information, nothing to be done. Now from this side, credit side, sales, okay, fine, nothing to be done. Profit on sale of import license, this is taxable under that PGBP, so nothing to be done. Gift received, if it is incidental to your business, then it should be taxable under the head PGBP, else we will think about income from other sources. Closing stock, if no information, we will do nothing. Now I am coming to this additional information. Interest on loan is paid to brother of Sri Khote for loan taken for payment of advance income tax. If any loan has been taken for payment of income tax or advance income tax or TDS, that should be disallowed. Henceforth, this 2,500, this is the interest on loan. This is the interest on loan amounting to rupees 2,500. Now we comes to know about this fact that this interest on loan has been paid to brother and the loan was taken for paying advance tax. Henceforth, this interest should be disallowed. So I am going interest on loan 2,500. Again, in the notes section, I will provide the suitable notes. Now, second point, during the previous year 2017-18, SSE had claimed rupees 45,000 as bad debt out of which only rupees 35,000 was allowed. During the previous year, he recovers 25,000. Okay, so out of 45,000, 35,000 allowed, that means 10,000 was not allowed. During the previous year, he recovers 25,000. This recovery, first we will consider 10,000 against the bad debt which was not allowed to me, and remaining 15,000 we will consider as a recovery of bad debt. If it is not credited into PL statement, then we are required to add in the our computation. We are required to add in computation here, add income tax payable but not credited to PL account. Recovery of bad debt comes to rupees 15,000 with suitable explanation. I am giving a serial number 7, so I will explain here what is the situation as per section 41. Whatever how could you frame it is hardly matter, but you should explain it why you are going to add it. As per section 41(4), where a deduction has been allowed in respect of bad debt or part of date under section 36(1)(7), then if amount subsequently recovered on any such date or part is the whatever explanation you required to give, please give the suitable explanation. Now next information, contribution towards unrecognized provident fund was paid within time. Even though it is paid within time, contribution to unrecognized provident fund is disallowed. We already done that thing. Legal expenses includes rupees 2,000 paid for preparation of income tax return. Since this is income tax return, is the consultancy fee for filing income tax return is included in legal expenses. This is related to the business, so nothing to be done. So this expenditure, we are nothing to do with this information. Stock is undervalued by 10%. Okay, now here only the stock is mentioned. We are not sure which stock, opening or closing. The best bet is that both of the stock is undervalued by 10%. That means if opening stock is undervalued by 10%, so this is 90% of the actual value. That means this undervaluation of opening stock has increased my profit. Here similarly, my closing stock is also undervalued. That denotes it is only 90% of my closing stock, and which results into decrease in my profit. That means undervaluation of closing stock will decrease my profit. Undervaluation of opening stock will increase my profit. And on the reverse side, if my stock is overvalued, opening stock of my overvaluation of my opening stock will decrease my profit, and overvaluation of my closing stock will increase my profit. Keep these things in your mind. Now, since it is undervalued, so opening stock, the undervaluation of opening stock has reduced, increased my income, and undervaluation of closing stock has reduced my income. This one results into more income, and this one result into less income. So I am adjusting suitably. So where is my adjustment? Undervaluation of closing stock, it will increase my income, and undervaluation of opening stock will decrease. So my total net effect on the valuation of stock is 8889. How could I got this figure? Closing stock was 2 lakh. 2 lakh divided by 90%. Okay, and this one is 1,20,000 divided by 90% as reduced by 120 as reduced by 200. Here I give this type of information here. Okay, so this additional information we work on. Now next one, gift receipt was given by supplier for achieving target sale. Okay, this is for achieving target sale, that is incidental to my business. Henceforth nothing to be done in respect of gift received by me, because it should be taxable under the head PGBP. Okay, now next one, outstanding custom duty has been paid on 31st/12/2022. Here we already discussed regarding outstanding custom duty. This is for section 43B item. This was not paid within due date of filing return. Ideally, your due date of filing return is 31st October, but this custom duty was paid on 31st December. That means after due date of filing return. Henceforth, this should be disallowed in AY 22-23. However, it should be allowed in next assessment year. But right now, it should be disallowed. Accordingly, I disallowed 25,000. I add back this 25,000 in your net profit. Don't you think we are preparing a bank statement like reconciliation of bank statement? We are doing on that way only. During the previous year, he comes to know that his former employee had embezzled cash of rupees 5,000 on 31st/3/2021, which was not accounted for. It should be 22, which was not accounted for till now. Okay. Since his employee done something petty theft of rupees 5,000, now we comes to know about this fact. This loss should be considered as a business deduction. Hence, we are reducing this expenditure, this loss as a minus item. Number 8, we will explain what is my reason. Traveling expenses includes rupees 50,000 being cost of trip to Singapore by an employee for 10 days. Okay. However, only 8 days of trip is useful to business and 2 days has been allowed as holiday to employee. Okay. Here traveling expenses is rupees 1 lakh. It is debited into your PL statement, and it is mentioned that out of this 1 lakh, 50,000 has been incurred for cost of trip of Singapore by an employee for 10 days. Out of that, 8 days was trip for business and 2 days he was enjoyed as a holiday. Since he is the employee, nothing to be done from our side. This is an expenditure. We are doing nothing. If the employer himself traveling to Singapore and 2 days was enjoyed as a holiday, then some personal expenditure is involved, else nothing is involved. No personal expenditure is involved, so nothing to be done in this respect. Rent includes expenditure on extension of shed on rented building rupees 26,000. However, such extension was completed on this 1st May 2022 with total cost of rupees 50,000. Here, the rent expenditure debited into PL is rupees 50,000. Out of this 50,000, it is mentioned that this rent expenditure includes expenditure on extension of shed on rental building. That means this is a capital expenditure, and this extension was completed in the month of May 22. That means extension was not completed during the previous year. Since this is a capital expenditure, it should be added back. Furthermore, depreciation should not be considered because this is not fully complete during the previous year. It was completed in the next financial year, so depreciation will be allowed from the next financial year. In short, this 26,000 which is included in rent should be add back. So I add back this 26,000 with suitable remarks. Next one, general expenses include salary of rupees 1,200 paid to domestic servant. This is your personal expenditure. Salary of rupees 1,200 paid to domestic servant. This is personal expenditure. So this should be added back. We know that section 37, all revenue expenditure shall be allowed provided these are fulfilled. Out of these, there was a condition that expenditure should be not of personal nature. Here this is domestic servant expenditure should be add back. So I am considering 1,200 as addition with remark number 6 with suitable remarks I am giving here. Any expenditure of personal nature is disallowed. Or whatever type of remarks you are required to be given, please give it. Please explain what is your opinion, why you are adding this thing. And another one is compensation of rupees 2,000 paid for retrenchment of an employee. Okay, fine. If your employer is retrenching someone, whatever expenditure you are incurring, that is your related to your business, henceforth nothing to be done regarding this aspects. So altogether, whatever addition or the minus I'm required to do, I already done in the sheet. Now I'm calculating. All these are required and I required to be added. So my total addition would be 76,700. After this 76,700, my profit including net profit comes to 334,700. I'm going to adjust this loss of rupees 5,000. So my after adjusting this loss of rupees 5,000, I got my profit 3,29,700, and the adjustment of stock required addition of rupees 889. So my business income is 338,589. Okay, this is my first illustration. If anyone have any question, any doubt, please comment on it. Now I'm moving to second one. Here PL statement is not given, but some informations are given. How to proceed this type of illustration, we are going to discuss this one. During the previous year, 21-22, both of the illustration are from your study material, number 25 and number 26. During the previous year, 21-22, profit and loss account of Sri Raj, proprietor of Raj Enterprise, engaged in the business of ready-made garment, shows profit of rupees 1,50,000. With the following information, compute his taxable income from business. The starting point would be 1,50,000. So my structure would be start with 1,50,000, net profit as per PL account rupees 1,50,000. Keep into mind this heading should be given particulars, note, details, amount, and computation of PGBP of Sri Raj for the AY 22-23. This is good for your better presentation. Now I'm going to consider each and every information. Interest on capital. Interest on capital paid to proprietor should be disallowed because no one earned from himself. So this rupees 5,000 should be added back. So I'm going to add first heading, expenditure disallowed but debited in PL account, interest on capital 5,000 with suitable remark. The remark is number 1. So I here mentioned in notes, what you may termed as a notes, you may termed as a remarks, you can say explanation, whatever word you are using. Interest on capital to proprietor is not allowed as no one can earn from a transaction with himself. Whatever you think best, you can provide, you can mention. Purchase includes goods of rupees 12,000 from his younger brother in cash. Oh. However, market value of such goods is rupees 9,000. Here 48(2) comes into play. Unreasonable payment made to relative. So 3,000 unreasonable has been paid to his younger brother, and after adjusting this 3,000, my allowed expenditure is 9,000. Though it is paid in cash, 48(3) is not applicable because it is within 10,000. So total disallowance on account of this information number B is rupees 3,000, that is under section 48(2). So I added back rupees 3,000 and with remarks number 2. Here in 2 I mentioned any unreasonable payment to relative is disallowed, hence rupees 3,000 shall be disallowed. Since cash payment towards allowed expenditure is only 9,000, which does not exceed 10,000, provision of section 48(3) is not applicable. In whatever your opinion, whatever is your opinion, whatever your wording, try to explain why you are adding all these things or by reducing all these things. Number 3, interest paid outside India rupees 1 lakh without deducting tax at source. Okay, 40A, we know that if anything is paid outside India without deducting TDS shall be disallowed. 100% disallowance should be there. So I am disallowing, adding back. Disallowance means your income would be increased. So if I add money in the net profit, it would increase my computed profit with explanation number 3. I'm not going into explanation 3. What is the wording? Whatever words you are trying to use, please use it, but give some explanation. Next, penalty paid to government for non-filing of GST return rupees 5,000. If it is penalty, it should be disallowed under section 37. So I add back this one 5,000. Now next one, penalty paid to customer for non-filing or non-fulfilling of order within time rupees 10,000. This is not a violation of law. Case number D was a violation of law, surely disallowed. Case number E is not a violation of law, it's a violation of a contract, so nothing to be done in this respect. Bad debt rupees 1 lakh. Money has been advanced for purchase of building. Is it considered as bad debt? What is your thinking? Bad debt means the date which becomes bad. Here it was never shown as a date. It was never hit my PL statement. How we create this advance for purchase of building. This was never hit my PL account. If it is a case of debtors, when I create debtors on the correspondingly on credit side of the PL, I will book sale account. That means by crediting my PL statement, I creating the debtors. But in case of advance for purchase, I'm not doing so. So this should not be considered as bad debt. However, However, if you consider this as a business loss, as a section 28 loss, it should be allowed. Okay, not as a bad debt, but it should be considered as a business loss. It should be considered as a business loss. Okay, if you think this should not be allowed, if you think this should not be allowed, and if you think this should not be allowed, add back it in the given illustration. I am considering this one as a disallowed expenditure, since it is a capital expenditure. If it is a revenue in nature, we will surely allow it. If we consider this is a capital expenditure, so I am not allowing this bad debt, and here I add back this one. If you think this is allowed, please allow, but since it is a capital in nature, it is for building. If it was for goods, for supplying goods, it should be allowed. But if you think it is for capital expenditure, it should not be allowed. Revenue expenditure on promoting family planning among employees, rupees 10,000. Ideally, there is a section called 3619, but that section covered this type of expenditure if incurred by company SSC only. However, if it is our SSC is not a company, the section 3619 is not applicable. But since it is a revenue expenditure, we can think about section 37. If you think this is allowed under section 37, nothing to be done. If you think that this should be added back, then you should add it back. But I am thinking this is a revenue expenditure incurred for business. This is not a personal expenditure. Henceforth, this should be allowed, not under section 3619, but under section 37. Premium paid on health of employee, rupees 6,000 in cash. Here this is crucial. Premium paid for health of employee, fine, it is your business expenditure, but in that section it is specifically mentioned that the premium for health of employees should be paid other than in cash mode. But you paid in cash mode, this should be disallowed. So I disallowed this 6,000. Now comes to next. Premium paid on health of his relative, rupees 6,000 in check. Since it is a premium paid for relative, that is your personal nature, your personal expenditure is involved, though it is paid in check, but it should be disallowed. This is not your business expenditure. However, you may claim any other deduction, maybe under chapter 6A called 80D, etc. I'm not going into that because my target is to compute PGBP income. So this is not my business expenditure, and so I add with this 6,000. Employer's contribution to RPF, rupees 12,000. One half of the amount is paid after due date as per relevant act, but before 31st/3/2022. Out of this contribution of rupees 12,000, the amount was paid after due date of the PF, but before end of the previous year. Even if it was paid within the due date of filing return, it should be allowed. Since it was paid in the previous year itself, nothing to be done. No adjustment is required in this regard. Employees contribution. Now comes to employees contribution to RPF, rupees 10,000. Half of the amount is paid after due date as per relevant act. If in case of employees contribution, when you got the money, it will be treated as your income, and if you paid within the due date of the relevant act, a corresponding negative is available. So if this is 10,000, then when you got the money from your employee, your income would be considered as 10,000. When you paid the money within the due date as per relevant act, you will got corresponding minus. So half of the amount is paid after due date. That means within due date you paid only 5,000. The net result is that 10,000 was addition and 5,000 is subtraction. That means 5,000, your income would be positive 5,000 should be increased in your income. So I'm adding this 5,000. I'm giving suitable remarks on this, remarks number 11. Whatever wordings you choose, you please explain your situation. Next one, interest on late payment of professional tax rupees 1,000, and that interest is yet to be paid. Now the situation is that what is professional tax? If you are paying interest on professional tax, whether it should be allowed or disallowed. My opinion is that it should be allowed, so I'm not going to do anything. But if you are thinking that since it is an interest, it is in the nature of penalty, since I did not pay the professional tax, hence it is a penalty, henceforth it should not be added. Any violation of law, any penalty paid for violation of law should not be disallowed, shall be disallowed. If you are going with this theory, it should be added back. But my theory is that interest is not a penalty. Interest is compensatory in nature, but it is not for violation of law. We are going to pay interest on delayed payment of professional tax. Why? Because government is getting their remuneration, their taxation after some period. So we are going to pay interest which is compensatory in nature, nothing to be done. This is my opinion. If you think otherwise, add back. I am thinking that this should not be add back. If this is not tantamount to penalty, henceforth this is not disallowed. If you think this is disallowable, please add it. Interest on however, if it is for the purpose of payment of income tax, surely this should be disallowed under section 40A. Professional tax is not an income tax. Next, interest on loan from State Bank of India rupees 10,000. Rupees 5,000 is not paid till due date of filing return. Obviously this is 43B item. If not paid within due date of filing return of income, this should be added back. Hence I am adding this 5,000. Next, interest on late refund from income tax department rupees 500. You got, this is the credit, you got rupees 500 as an interest on late refund from income tax department. Surely this is your income, but this should not be considered under the head PGBP. It should be taxable under the head income from other sources. So for the purpose of computing business income, I'm going to reduce this 500 while computing your business income, but it should be considered under the head income from other sources. It is taxable, but under the head income from other sources. So while computing this PGBP income, we are going to reduce this 500. The next one, sale includes sales to Raj rupees 10,000, cost of such goods rupees 8,000, and market value of such goods rupees 12,000. Now, we know that no one earned from himself. If proprietor himself bought a goods from his own shop, the profit element should be nullified, and whatever the cost of that goods, it is considered as a drawing. So this should also be added back. First of all, cost of such goods that you withdraw for your personal purpose, it is a drawing. So your purchase amount should be reduced by this 8,000. That means out of your whatever the number, say 1 crore your purchase account shows that 1 crore, but out of this 8,000 was used for your personal use. Can I say that your purchase should be reduced by 8,000? So I'm adding back this 8,000. That means the cost of the goods withdrawn by you for your personal purpose, I'm adding. This should not be allowed. This is your personal expenditure. Henceforth, I'm adding back this one. But one more thing, your sales also include sales to Raj for rupees 10,000. This sale also a revenue for this sale. No one can earn from himself. Henceforth, this should also be reduced while computing your business income. Entire 10,000 should be reduced and entire 8,000 should be added back, or one can do only 2,000. That profit element should be adjusted. If whatever you think, you can do it. He received rupees 80,000 from a debtor at a time in cash. He got rupees 80,000 from a debtor at a time in cash. B student 48.3. This deals with the cash payment but not cash receipt. If someone is paying me in cash, I have nothing to do. The restriction imposed under section 48.3 is for payment. This is for receipt. The case is for receipt, so I have nothing to do with this. Recovery of bad debt rupees 10,000, out of which rupees 8,000 was allowed as a deduction during the AY 17-18. That means 8,000 was only allowed, 2,000 was disallowed at that time. We are nothing to do with 2,000. For 8,000 we are required to add this one. That means 8,000 is already credited and 2,000 we are supposed to adjust. We reduce 2,000. Depreciation being not debited in accounts, rupees 20,000 allowed as deduction under section 32. Since it is not debited, you should get the deduction on account of depreciation, so it should be reduced while computing your PGBP. Where I am reducing this 20,000, your income by rupees 20,000. So altogether, the addition, the summation of this added item is 2,43,000. After this, my income would 3,93,000. After adjusting this reduction item, that means less I got my profit under the head PGBP 3,60,500. Hopefully this will serve the purpose. If you require few more illustration, please comment. If possible for me, I will surely upload. In this way, I will upload the more illustration. Hopefully you enjoy the purpose of this video. As promised, I am uploading this by this Sunday. Please subscribe the channel, and if any questions or any doubt in your mind, please comment in this channel. Any video you can comment. I will surely try to help you out. Thank you. But don't forget to subscribe the channel and download the app. You know, everyone know about this Vikash Mundhra classes app. Please download it, where I am providing some commercial services. Obviously, I am a student of commerce. Thank you.